Welcome to this week's Morton Brown Weekly Market Update. I am thrilled to be back in the office after a quick vacation last week, and I'm happy to be here with Dennis Morton and Cody Demmel today.
Hi, welcome back, Katie.
Hi, thank you. So we want to talk about three things this week. The first one is this is earnings week. This is the biggest earnings week of the year. And this year it makes a big difference. So it'll be fascinating to talk about how that's playing out and who's coming up. And then secondly, we want to talk about how everybody is a day trader and what that looks like nowadays. It's definitely a different environment that we've had previously. And then finally, the gold rally and some of the drivers behind that. So why don't we kick off with earnings week. Cody, I know you've been tracking some of this and would love to hear from you on that.
So like you said, this is the largest week of earnings. It's especially important now, or at least for some of the stocks. We'll get into a little more detail there. Around 40% of the S&P 500 is reporting this week. And then some of the major companies that are reporting tomorrow, Thursday, are Facebook, Apple, Amazon, Google. So it'll be really interesting to see what the analysts think when they come out with their earnings tomorrow.
Yeah, and I think it's important to remember anytime you're looking at earnings, it has so much to do with expectations that it's not a matter of whether things are good or bad, it's whether they were better or worse than what was expected. So you're going to hear some numbers that could be completely awful, and you could see stock prices go through the roof because they're not as bad as we thought they were going to be. And then you just have to listen to see how are they thinking about the rest of 2020 and into 2021.
Exactly. I think that's going to be the most important, what their outlook is going forward. Because obviously everybody knows, unfortunately, Q2 isn't going to be the best, especially compared to last year. But it'll be interesting to see what their outlook is moving forward.
Yeah, I do expect we'll continue to see some of those huge variances between the different industries and sectors that we have out there. I know Boeing, for instance, is coming out with their earnings. I'm sure that's going to look, quite a bit different than some of the tech companies that are coming out, just because it's a different environment. But you're right, Dennis. It'll come back to expectations. So how far off or on top of the expectations are they?
Yeah. Right. And a lot of these companies are going to be shifting to doing different things, and how are they changing their business models? This is where you can start to hear where the creative destruction that's happened over the last couple of months starts to turn into new types of business and new ways of running the businesses.
So in the Wall Street Journal, we came across an article about day trading and just how much of a boom we've seen on the day trading platforms. So E-Trade, for instance, opened up, was it 260,000 new accounts just in the past month. That's more than any other record year, full annual year that they had previously. Robinhood, I think we might have talked about Robinhood before, they opened up 3 million accounts in the first 3 months of the year. And the article in the Wall Street Journal, really talked about how there's a shift. I mean, people have free time. Maybe they don't have the same hobbies that they had before. Maybe their income streams are different. And so they're looking for a way to kind of backfill that. And trading has never been cheaper. And so it's almost become a little bit of a game or a hobby. And you get that, that quick excitement in a fast moving market up as we've had the last quarter. A lot of people have made money. But I think it's going to be a different environment when things start to normalize a little bit, and some of these positions that they're jumping into, may become overvalued very quickly, and the downside's not going to be as pretty.
Yeah, I think anytime you're trying to, when you're investing, if that's what we're going to call it, the day trading phenomenon, if you're trying to win the minute or win the day, you're playing the wrong game. And I think that's the part that it's really hard to see in the moment, that it really is just that it's replacing some other dopamine hits that aren't coming from other sources right now. It's not a fundamental story, it's a behavioral story, a fascinating behavioral story.
Yeah.
I think one of the other red flags for me in reading through that is the access to leverage. So a lot of the trades that are being placed that are options trades, And so the ability to leverage your money or place bets in one direction or another. And if you don't fully understand that, option strategies can be very complicated, then you can be much more exposed than you might realize. You might be thinking that you're only playing with maybe a few $1,000s, but that can very quickly turn into a lot more than that. That personally has me a bit alarmed.
Yeah, and there's that idea that if you own a stock or are betting on a stock, the upside is unlimited, the downside is limited to zero. But now you have people who are inexperienced traders going in and betting against stocks where your downside is unlimited and your upside is limited when you're betting against. And that's it's kind of a simple concept when you think about it, but until you realize, oh my gosh, there's no end to how far this can go down if I bet against something, that can create some really challenging situations.
Yes. Yeah. And Cody, was there anything else that you pulled from kind of that day trading conversation?
One of the things that was really interesting that we were talking about was Kodak, and how their stock went from, I think it was $2 on Monday to now it's $46.
Cody, is that because they're making better cameras at Kodak now?
Yeah,
there's something else about this.
Yeah, there was the government said that they're going to give them a loan to start making some generic drugs in the United States. That's just the crazy thing, that they just really took on more debt and the stock went up that far. It's just some of the crazy. And then another thing I was looking at is Robinhood that we spoke about. 9,000 accounts held position on Monday. Now over 90,000 accounts hold position.
So
it's that herd mentality to get into that hot stock, and that thought process of if I'm day trading or trading it quickly, then I'll just get out when things start to go south. But it can move so fast.
And so let me make sure I understand this. So no new product rolled off the assembly line. There was no grand strategy with an economic model in there. All they said was, we just took on $700 million of debt, and we think this thing's going to happen later on down the line. And,
exactly.
Creator to the pilot. Cody, could pull up that 5-day chart of Kodak, because a picture is worth 1,000 trades. So that is last week through today, Wednesday.
Today, yeah. You can even see how volatile it was today from last week. Well, from Monday, the 27th, till earlier today, it was up 2,400%. Now it is up only 1,400% since
so
Monday.
So we lost 1,000% today. Oh, I mean, more or less from the beginning. I mean, it didn't, but it was cut in half almost at different points during the day.
Yeah. So the high price of the stock was around $53, and now it's all the way down to $33.
I think when was kind of crunching some numbers on this, if you had purchased Kodak at 10 o'clock this morning and sold at 10:45, you would have more than doubled your money. But if you've been the person buying that stock at 10:45, you would have lost nearly 50% by 11 o'clock. So in 15 minutes, you would have lost 50% of your investment. Yeah. So it's just, buyer beware.
Yeah.
I don't personally have the stomach for that. So how about gold? Let's talk a little bit about gold, because that's a fascinating movement that we've had there of late as well.
Yeah. We talked last week about gold being a potential inflation hedge, or how it might be one of those tools that you might use. But let's face it, if you've been trying to hedge against inflation or buy commodities or gold itself, it's been a long decade. And now suddenly you see this big spike up in gold prices, and the question is why? And there was an article that came out earlier this week about how it's not exactly who you might think it is. I mean, sometimes you think of just people who are very defensive or very, just have a worldview where gold is supportive of catastrophe insurance, let's call it. They're saying more institutions, endowments, large pools of money, even retail investors are starting to move into gold. And the phrase that was used by one fund manager is, it diversifies my diversifier. So think of, instead of owning all stocks, you add in bonds as a diversifier. But what if that doesn't work anymore? Like, we count on bonds to pay income and preserve principal. Well, they're not paying income anymore. So what can help to diversify that? And a lot of institutional investors are settling on gold as an option, at least for the time being. And they're not, gold doesn't pay you a dividend. It doesn't have any earnings. It's only worth what the next person will pay you for it. But at a time like this, it can be a safe haven to preserve purchasing power and do that. So it's interesting to see that it's not just being socked away in drawers, it's actually being used strategically by large institutions now.
And we saw that it was the best performer over the past week. It's really bounced up.
Yeah. So there's all these mini cycles happening all through the last 5 months. It's just from month to month, you can have outperformance and trading leadership and all those things happening. So diversify.
Yeah. So how about, I know we're in the middle of summer now. What are the fun things that you guys have been doing this summer to kind of occupy your time? Anything interesting, Cody?
Nothing real interesting. Taking our dogs on a lot of walks. Golfing. I'm going golfing this afternoon, actually, so that'll be fun.
I learned how to surf. That was fun. So we got in a little bit of time at the beach and figured out how to do that. Although it was less surfing and more kind of a cranial saline cleanse as I got rinsed over and over and over again. But eventually it worked out, or whatever counts as working out for me, standing up on a board.
Nice. I did something last week. So I was on vacation back in my hometown in Michigan, which was really nice. But just went fishing. I haven't gone fishing in years, and we had so much fun, just way out in the middle of the lake, and I love my lake water. But
how was it? How big, Katie? Is it?
Well, so my daughter and I were about here, but my son caught a couple of huge trout. So
wow.
Yeah, we cooked them up. It was quite tasty.
Nice.
Very, very cool.
All right. Well, thank you so much for joining us for this weekly market update. And if you have any questions that you would like us to, cover during these, or anything that you just would like to reach out to chat with us about, we always welcome any calls or conversations. So thank you once again, and we'll look forward to seeing you next week. Take care.
Bye-bye.